Hello traders, welcome to your daily market update for Thursday, the 9th of April 2015. And we've had a quite lackluster night overnight. The market was really heating up when we moved into the US session, as it has been of late. If you've noticed, the US dollar index starts to get a little excited during the US session. It's just a pattern that the market's in at the moment, as the world is focused on the US and when they start raising rates. We got an indication of that last night. So in the US session, we had the Fed minutes, and it was a very interesting statement where the minutes actually, in a normal, typical world, would have actually been quite dovish. We would have seen the US dollar fall off because they mentioned some things where they weren't raising rates, and the US dollar was quite high, and it may impact inflation, and economic data of late hasn't been the best. However, the whole key to that statement was, when will the Fed raise rates? And they did mention that a lot of members, not a lot, I should say, it was a torn board where some were talking about raising rates in June, and others were still on the fence, so they chose to just wait it out for a little bit longer. Nonetheless, they did confirm that they will raise rates in 2015. Very important, and now the market actually has that confirmation, that evidence from the Fed's mouth, and not rumor, not speculation, not from any newswires or some journo making a story. It will now turn focus, and the whole globe should now move back into US dollar buying and US dollar support, knowing that any month they could start to look to raise rates. And we've seen that evident last night in the market, where the US dollar did have quite a good run. We didn't have a lot of data out of anywhere else, so the market was purely on the back of that. Greece is still in the headlines, and although they say they're making progress right now, at any moment the talks could go sour. So everyone's still cautious on the euro. We also had some M&A activity, which is mergers and acquisitions. Now, normally, if you trade Forex, you don't follow the stock market, but we need to keep an eye on big global stories. And in this case, we had mergers and acquisitions coming out where two major companies were looking to do a deal. Now, the deal was done in pound, or out of the pound as they sold. So we had Royal Dutch Shell agreed to buy oil and gas exploration firm BG Group. So the deal is worth 47 billion pounds. Okay, so when you've got money being pulled out of the UK because of this merger and acquisition, the market is already pricing in that deal, in terms that that sort of money will be leaving the country. So we've seen the pound actually get sold off quite heavily against the other pair. So that definitely was the contributing factor there for the pound. The euro was also weak, just purely on the back of the Greece fears. We've seen oil rally, and that also affected the CAD and the New Zealand and other commodity-based currencies. So let's get into it, where we've got coming up a session here. We have a little bit of data coming out about the pound. We have a little bit of data coming out for the euro. Nothing of great interest. And then we have the purchase facility and the Bank of England interest rate. Now, I don't expect any changes here at all, because I've mentioned before that the UK economy is in a holding pattern. They're just waiting for the rest of the world's inflation and growth forecast to get a little bit more stable before they even consider raising rates. And it definitely at this stage doesn't look like it will be this year. The market will be focused on US data and the Canadian data. So I think once again we're going to get probably a more active US session, as the market will be back into the US dollar bull. So keep an eye on that. Having a look at the dollar index, as you can see, we had this triangle that I've mentioned yesterday, and we had another bullish day where we come and broke out through the top of that triangle. If I go to a 4-hourly chart, you can see the moves a little bit clearer as we wait for the internet to kick in. And you'll see here the US session just really had a tearing rally, and then now we're in the Asian session. We've started to stall a bit. That's quite typical. However, we've taken out the the recent lower swing high. So we've made a higher swing high, and that's the first sign of indication that we are within a bullish trend. And for now, that's the most recent trend line that we need to respect. And this is the major support and resistance level here that we also need to respect. So for now, we could get a pullback, and we could test the back of this trend line in the European session, and we could get a bounce, or the strength of the Fed's minutes could actually just continue for the US dollar strength. So keep an eye on, once again, the US dollar index, because that's what the market is focused on, and we want to be up to date with what's going on there. Let's have a quick look at the charts, and you'll start to see that the New Zealand versus the US, we did have quite a big run as the US dollar index come off in the European session, and we tested the downtrend. So we are moving into quite a consolidation phase. You'll see the uptrend line and a downtrend line. We have forming a triangle here. And I do expect the consolidation between 76 cents and 75 cents to remain for the time being. You can see that we really haven't got much price action. If I go to a 4-hourly chart, it's even emphasized further. And we're just consolidating here. So I'm waiting for further signs before I look to a long-term trade, or you might be able to do some scalping in a range-bound market should you have a strategy to do that. The Australian dollar was a little bit more supportive, and we've seen a little bit of a bounce there. The market's still hanging on to the fact that the RBA didn't cut rates, so it's holding a little bit firmer than the other particular currencies. If we have a look at the 4-hourly chart, nothing too exciting. We did have the US session here pull back, and we're back into the Australian and Asian session, and we've had a little bit more bid. We're still trading below 77 cents. That's still holding up as a resistance level, and if we get the US dollar bulls come back into play, I think that that level should be protected moving into tomorrow's session. The euro was sold off heavily. It's just purely due to the Greek fears. We still have the triple top here. We need to definitely respect the major support level here, and we are getting close to that. So it's going to be interesting to see how the market fares moving into testing down here at the 107 area. A break below that will definitely open up to the downside as the US dollar bulls pick up momentum, but it's going to be up to the US dollar bulls and also the market's fears for Greece. The longer this drags out, the greater the fears will become. We are still within, I've highlighted here on the Great British Pound, I've highlighted a box section. Now, the market has been contained within that box with a few false breakouts here and there due to some data, but ultimately we are trading within this box, and for that consolidation pattern to remain, I think that I'm not expecting any major breakouts at this particular moment, and any breakouts to the downside, I'm still going to be very cautious that it could be a false breakout and not be loading up expecting it to continue to fall. But at some stage, this consolidation will break out. I do expect it to be to the downside, with possibly the Fed coming out with their actual Janet Yellen elaborating a bit further on the minutes. And if that's the case and the US dollar bulls really pick up some steam, we could get a big breakout. And usually when we get a breakout after a big consolidation, if it's a continuation breakout, it can generally be the same number of pips that we had leading into the consolidation, especially a consolidation of this long. So you'd be looking at the downside of around $1.42, which ultimately for your entry would be 500 pips away if you were to get in somewhere around here. Stay patient, but in the meantime, range-bound trading strategies are the way to go. The US versus the CAD had a massive bounce off this very strong $1.24. Now that's a big sign, it's big emphasis. Now we had some large stockpile report of oil, so we've got a lot of inventory of oil, and that's only going to lead to oil prices falling. Even though that we've had some issues and worries about oil with the conflicts overseas, you'll note that those conflicts haven't got any worse, and with everybody still stockpiling oil, waiting to sell it at a higher price, the inventory levels are only going to get higher, and that's going to remain downward pressure on the oil price. So we've finally seen emphasis of that, and the market started selling oil. And with the US dollar strength, that also affected the price. And you can see here that it's just very clearly affected. I expect that this massive spinning top single day candle formation is a big rejection of $1.24, and we could see further moves to the upside with the US dollar strength. So it's definitely some opportunities there. Keep an eye on oil, and if they continue to fall, and keep an eye on the US dollar. If that continues to rally, it could be a trade where you can pick up some pips. Once again, the US versus the Jap had a little bounce here off an old support level where the market's reacted historically, and I think that ultimately we will move higher. It wasn't as big a move as you can see here in the daily candle. It wasn't as big a move as the others, and once again, bond prices kept it quite subdued. But ultimately, I think the US dollar strength story will eventually send this higher. We just have to be patient. So there's a few charts that I've mentioned here that we do need to remain patient if you want to stalk them for long-term gains and some trends. However, don't be afraid to initially move into some scalping methods and pick up some pips in the short term. Just don't get greedy and turn a winning trade into a losing trade. Just pick up your high probability pips and continue to move on. Well, that's it for me today. Be very wary of the markets out there. It looks like the US dollar strength may come back in after the Fed's statement, and I wish you all the best in today's trading session. Until tomorrow, trade well.